Imagine you just bought a used car for $8,000. You're excited. You finally have your own vehicle. But then you start shopping for insurance, and suddenly you see something shocking. The insurance quote is $2,500 a year. That's almost one-third the price of the car. Every single year. And you start wondering, why is car insurance so expensive in the United States? Is it because of accidents? Greedy insurance companies? Or something deeper happening behind the scenes? In this video, we're going to break down why car insurance costs so much in America, the real factors driving those prices, and the hidden system that most drivers never realize exists. Car insurance in the United States is not just a simple monthly bill. It's part of a massive financial system worth hundreds of billions of dollars every year, and the price you pay is influenced by dozens of factors, including accidents, lawsuits, vehicle technology, medical costs, fraud, and even where you live. In this video, we'll explain how car insurance pricing actually works, the biggest reasons insurance costs keep rising, real-life scenarios that drive insurance premiums higher, and the mistakes many drivers make when choosing coverage. By the end, you'll have a much clearer understanding of why insurance prices in America can feel so high. Before we talk about why insurance is expensive, we need to understand how car insurance works in the first place. In simple terms, car insurance is a risk-sharing system. Drivers pay a regular fee, called a premium, to an insurance company. That company collects premiums from millions of drivers. When someone gets into an accident, the insurance company helps cover certain costs. These costs can include vehicle repairs, medical bills, legal claims, property damage. But there are a few key terms that determine how this works. First is the premium. The premium is the amount you pay for your insurance policy, usually monthly or yearly. Second is the deductible. A deductible is the amount you must pay out of pocket before insurance starts paying. For example, if you have a $500 deductible and your car repair costs $3,000, you pay the first $500 and the insurance company may cover the remaining amount. Another important term is the coverage limit. This is the maximum amount the insurance company will pay for a claim. For example, a policy might cover $50,000 for injuries or $25,000 for property damage. Finally, there's the claim. A claim is simply the request you file with your insurance company asking them to cover a loss after an accident. Now that we understand how insurance works, we can start looking at why it has become so expensive. Let's imagine a real-life situation. Sarah is driving home from work in Chicago. She stops at a red light. Suddenly, another driver rear-ends her car. The damage looks minor at first, but after inspection, several costs appear. First, her car's rear bumper and sensors are damaged. The repair estimate is $3,800. Second, Sarah starts experiencing neck pain and visits a doctor. Medical treatment and physical therapy add another $7,000. Third, the other driver's insurance company begins investigating the accident. Lawyers get involved. Administrative costs increase. By the time everything is finished, the total cost of that small accident reaches over $15,000. Now imagine millions of similar accidents happening every year across the country. Insurance companies must pay those claims, and those payouts are one of the biggest reasons insurance premiums continue rising. But accidents alone are not the only factor. Several other forces are making insurance far more expensive than it used to be. Insurance companies use complex risk models to calculate prices, but the main idea is simple. They try to estimate how risky each driver is and how expensive future claims might be. Let's break down some of the biggest factors that affect insurance prices. 1. Rising vehicle repair costs. Modern cars are packed with technology. Features like collision sensors, cameras, radar systems, automatic braking. These systems make driving safer, but they also make repairs much more expensive. For example, replacing a simple bumper today may require recalibrating sensors and cameras. That can turn an $800 repair into a $3,000 repair. Because repair costs increase, insurance payouts increase, and premiums rise to cover those costs. 2. Medical costs. Another major driver of insurance prices is healthcare costs. When accidents cause injuries, insurance often pays for emergency treatment, hospital visits, surgeries, rehabilitation. Healthcare in the United States is among the most expensive in the world. Even a moderate injury can lead to tens of thousands of dollars in medical bills. Insurance companies must account for those potential costs when setting premiums. 3. Lawsuits and legal costs. The U.S. legal system also affects insurance pricing. After some accidents, people file lawsuits seeking compensation for medical expenses, lost wages, pain and suffering. These lawsuits can lead to very large settlements. Insurance companies often must pay for legal defense, investigations, and court costs. All of those expenses eventually influence insurance premiums. 4. Insurance fraud. Fraud is another hidden factor. Some individuals stage accidents or exaggerate injuries to collect insurance payouts. Examples include staged rear-end collisions, fake injury claims, inflated repair bills. According to industry estimates, insurance fraud costs billions of dollars every year. Those losses are spread across the system, meaning honest drivers often end up paying higher premiums. 5. Location and risk. Where you live also matters. Insurance companies look at risk factors like traffic density, accident rates, theft rates, weather risks. For example, drivers in large cities often pay more than drivers in rural areas. That's because dense traffic leads to more accidents and claims. Even your zip code can significantly affect your insurance price. Many drivers unknowingly make mistakes that can increase their insurance costs. One common mistake is choosing the cheapest policy without understanding the coverage. A very low-cost policy may have extremely high deductibles, limited liability coverage, major exclusions. Another mistake is ignoring how deductibles work. Some drivers choose very low deductibles to reduce risk, but that increases the monthly premium. Others choose very high deductibles without realizing how much they may need to pay after an accident. Another issue is not reviewing policies regularly. Life changes such as moving, buying a new vehicle, or improving driving habits can affect insurance risk. But many drivers never update their coverage. These misunderstandings can lead to unexpected costs later. While insurance prices depend on many factors, understanding the system can help drivers make more informed decisions. One important step is carefully reading policy details. Many policies contain exclusions, situations where the insurance company may not pay. Another useful practice is comparing different insurance providers. Different companies evaluate risk differently, which means prices can vary significantly. It's also important to understand how deductibles and coverage limits affect claims. These details determine how much financial protection a policy actually provides after an accident. Learning how these elements work can make insurance policies much easier to understand. Car insurance in the United States may seem expensive, but the price reflects a complex system. Insurance companies must account for rising vehicle repair costs, expensive medical care, legal claims and lawsuits, fraud within the system, regional accident risks. All of these factors combine to determine the premiums drivers pay. The most important thing to remember is that insurance policies often look simple on the surface, but the details inside them can significantly affect what happens after an accident. Understanding those details is the key to making sense of the system. If you want more simple explanations of how insurance works in the United States, make sure to subscribe to the channel. And if there's another insurance topic you'd like explained, like health insurance, home insurance, or life insurance, leave a comment below. Your question might become the next video. Thank you.